In this video, I'm going to talk about the 3 steps you should take today to work your way to financial independence and how to avoid the biggest mistake people make in step 2. Welcome to What Happens Next. Now, I love being a financial planner. I'm really lucky that I get to really enjoy my job. And I'm sure my dad assumes that I'm spending all day in front of screens and looking at technical looking graphs. I'm sure my friends assume that I'm out meeting and greeting people all day. But the reality is the life of a chartered financial planner is pretty diverse, because not only do we do the elements of technical analysis, but we also get to understand about people's lives and the role money plays in their lives. So who am I? My name's Chris. I'm lucky enough to be a chartered financial planner and run my own chartered financial planning practice. And I've done that now for over 15 years. And actually, what I love to do is getting people to a point where they understand the amount of money they need to make sure that they can live the lives they want. That is true financial independence. Understanding how much you've got, whether it's enough to live the life you want for the remainder of your life. And today, I want to talk about the 3 clear steps you can take immediately without the help of somebody like me to get closer to understanding what financial independence means to you and to start working your way there, or to find out you're already there and then to be empowered with that information and say, you know what, I can live the life I want to today. So I'm going to talk about those 3 steps. But before I move on to the 3 steps, I'd like to ask a favour. We're on a mission with What Happens Next to help people navigate the next steps of their lives successfully. And that's through all of the content on the What Happens Next website, through this YouTube channel, through the podcasts we run. What we want to do is help people, primarily in their 50s and 60s, navigate that next stage of their lives, be it retirement or whatever's next, in as successful way as possible. And the easiest way for you to help for free and today is like this video and subscribe to our channel. It allows us then to do a lot more good quality content, encourages us to make sure that the guests we invite onto the channel are adding as much value as possible, and allows us to continue to grow the channel. But I want to add value today, so without further ado, let's talk about the 3 steps, and in particular, keep an eye out for the mistake most people make in number 2, so you can avoid it. So number 1 is understand what enough looks like for you. The first step towards understanding financial independence is to work out your enough. And enough is the amount of money you need to make sure you'll never run out again. Now, often when I'm working with clients, I'll ask that question, and clients will come back and say, I don't know how much is enough, because how much is enough is too broad a question. So let me ask you a really specific question so that you can get to your number of financial independence, how much enough means for you. If you never needed to do a shred of paid work again, how much income would you want to live the life you truly desire every year? Now, the interesting thing is, a lot of the responses I get are, I don't know, what does everybody else choose? And the reality is that your number that represents enough will be unique to you. Now, there's a really easy way of working out your number of financial independence. And actually, we've got a free gift for you in this video, a PDF that we can send you that you can get access to using the QR code below, called What's Your Number? That's issued by our financial planning business, Savello. Use your phone to take a photo of the QR code. It will take you to a page and we'll email it straight to you. The starting point to working out how much is enough is the simple budget plan. And in that document, you'll find the budget plan, but there's plenty of good budget plans online. Because what that will allow you to do is work out how much money you need for the essentials, but also work out how much money you need for travel, for things you really want to do in that next chapter of your life, and then come up with a number, which is the amount of income you're actually going to need for the life you want to lead. However, there's a couple of important factors I'd consider when you're thinking about how much is enough. Firstly, some of the expenditure you've got today may not be there in the future. Things like school fees, things like potential mortgage if your mortgage is being paid off, things like travel to work. They're all going to be things that for that next chapter, you might want to take out of the amount you need to spend. But also, and this is the second part, you might want to add some expenses back in, because elements like travel and elements like the fact that you've got more time when you're financially independent to do whatever you want might mean that you're going to be spending more money. Time is the element that you've got. So there might be additional expenses that you might want to spend if you had more time. And these need to be factored into the plan. So that'll give you, once you've worked out your budget, once you've done a budget plan, once you've taken out all of the elements that you're not going to be paying when you're financially independent, and then added all the elements back in terms of what you'd spend if you had more time, that will give you an income number. What's the next step? And this comes to step 2. It's work out what your assets are and the continuing income you've got that contributes to the plan. So you know how much you need. What you need to do now is you need to work out what income and assets you've got that are going to support you to achieve your goal. Now, there's 2 main elements of your wealth that I'd recommend you include. Firstly, there's your assets, ISAs, pension pots, property portfolios, and those values, working out those values are really important. I would look at what assets are tangible that you can draw down on, like your ISAs or money in the bank, and what you can't, which might include property. And there also might be some bits in the middle. For example, pensions pension pots you can get access to, but not until a specific age, depending on how old you are. So there's elements that you need to think about when you're thinking about financial independence. Money you can get access to immediately, money that you'd have to sell an asset to get access to, like property, and the bit in the middle, assets you can get an access to, but actually only at a certain age. So factor all of those elements in. However, the element that I want you to include when you're thinking about your plan is the amount of continued income you're going to expect if you don't work. Now, that might include defined benefit pensions, pensions that aren't a pot of money but pay you an income for life, but also, and this is the one that most people ignore, your state pension. Now, a couple who has a fully funded UK state pension, as I record this, are entitled to £22,985 a year. And that contributes, if your income need is £50,000 a year, that contributes a significant amount to that element. And I'd certainly be looking at including that as part of your plan. Now, the good news is there's a really easy way of doing that. If you log on, if you're in the UK specifically, if you log on to the government gateway, you can do this in a pretty straightforward way. Just Google state pension estimate, and the first page that should come up is the government page that helps you work out what entitlement you've got to your state pension, whether there's any gap, what you might need to do to fill it, and the action that you can potentially take. So certainly know what you're entitled to when it comes to state pension. So step 1's look at how much is enough, and we do that by looking at the budget plan, what expenses we need to remove and what expenses we need to add. Expenses we might want to remove are school fees if they're going to start, mortgage debt, things that you're not going to be paying out for forever but will stop at a specific period of time. And the things you might want to add is all of the things you want to spend money on when and if you're financially independent enough and you've got the time. That's part one, and that will give you an income number. Part two is work out where assets you've got. So how much have you got in assets and how much have you got in guaranteed income that doesn't require your time swapped for money. So that's really important to do. So assets and income. So step three is work out both your income gap and your capital gap and simply take action. So let's talk about the income gap. That's the amount of income you need minus the amount of income you know you're going to get from guaranteed income sources. So let's take a really simple example. Let's say you needed £50,000 to live the life you want, and you're in a position where you know you're going to get £30,000 from guaranteed sources, defined benefit pensions, and state pensions. That leaves you a gap of £20,000. Now, the next step is to work out the capital gap. So if we took that £20,000 a year and times it by 25, that would leave you a capital gap of £500,000. And that's the amount of capital you'd need to get access to fill that gap. Now, that calculation uses a rule called the 4% rule. And there's a couple of really important things to say about this. That gives you only a broad overview. If I'm sitting down with a client, I'm using really nuanced cash flow planning software that takes into account investment growth and tax and inflation and all those sorts of things. But as a starting point, it's a really good calculation to get to understand the amount of capital you might need to help you make sure that you're never going to run out of money again. And bear in mind that regardless of whether there's a gap or not, you know, if your gap is £500,000 and you've already got there, that then gives you a choice to do what you want with your time because you've already achieved a degree of financial independence. But if you're not there yet, the thing you need to do is decide how you're going to get there. What pots are you going to save more in whilst you're still working to achieve that level of financial independence? Now, the reality is this is only a starting point. These 3 steps only give you a starting point. But the starting point is really important because the more clarity you've got financially, the better you can make decisions about how to live your life and what to do as the next step when you're thinking about what happens next. I want to talk about the other areas that you need to prepare, though, because money is one really important area to get clarity, but there's other elements. And I want to talk about the areas that I'd suggest you need to prepare for in this video, which talks about how to avoid falling off the retirement cliff. Have a lovely day, and we'll see you next time on What Happens Next.